Hello and welcome to Long Investor. So let's talk a little bit on the market today and go over some of the stocks. And if you have been following my channel, you know I was expecting a rally this week. And today we did get a high open, but then it quickly got pulled back. And it was mainly due to the Netflix missing the earnings. I saw Netflix dropping 20-25% yesterday after market, but I did not expect it to have that much of an impact to the whole market today. So as the sell-off continues for Netflix, some other growth stocks such as Robotics and Sharp, they also dropped over 10% today. And Tesla earning was set to be after market today. And at the beginning, Tesla was also dropping. Maybe people were expecting a bad earnings for Tesla as well. And then after market today, Tesla actually beat the earnings in terms of revenue and the number of sales. And after market, it has recovered to this drop. And since Tesla is much bigger than Netflix, and hopefully the good earning news will bring a better market sentiment for the investor. And despite the pullback of today, we're still within the short-term uptrend as of now. And both the momentum seems to be in line with the price, so there isn't really a divergence showing yet. And the futures as of this moment is all green, so I'm still expecting a rally for the days to come. But with the turbulence we're getting lately, and we're getting very close to the next FOMC meetings, I think it will be lucky enough for NASDAQ to reach 14.2K for now. And I'm expecting a pullback before the FOMC meeting, and this time maybe it will be back to the 13.6K instead of the 13.3K. So for today, I'm still holding at the moment. As for the US dollar, since yesterday it was reaching the 101 resistance and it is getting a pullback for a little bit, and I'm expecting the US dollar will most likely consolidate a little bit, and then I think it will have another try hitting the 101 or possible having a little break over the 101 zone before or after the FOMC meeting. Because if the Fed raises the interest rate again, in a high interest rate environment, it will usually benefit the country's currency. So that news might push the US dollar a little bit higher. But I don't really think there's a chance for a strong breakout for the US dollar, just because a lot of things are pricing in at the moment. So since November, December, when the Fed announced they will have like 6, 7, 8 times of rate hikes, the US dollar has been going up. And of course, recently the Ukraine-Russia conflict that started in late February also helped pushing the US dollar higher. So if it does consolidate more on the next few days and then possibly going higher for a double top or a little false breakout, then I think BABA will most likely to fill in somewhere in this gap, and we will have a much better risk-reward ratio to enter BABA by then. The same thing goes with the 10-year bond yield. As I've explained, there is divergence showing between the RSI and the price. So in order for the RSI to have a reset, it will either consolidate or to have a correction. And if it does consolidate, the worst case scenario will be the Fed raising the rates higher and faster than expected, and that will trigger another bond sell-off, which will have another breakout for the bond yield. And as I've explained in my previous video, the inflation percent will most likely to come down for the next 2 months, and the Fed will probably sound dovish by then, maybe in June or July. So this possibility, I think you have a less of a chance of playing out. So I do see the bond yield to fall back down maybe 2.5, 2.6% in the short term. And when it does reach that level, we'll take a look at the data and the macro environment to determine whether the bond yield will get supported to go back up, or will it break the support and then go lower. So I think it was yesterday or 2 days ago, I was saying the bond yield and tech go up at the same time. So in a very short period of time, such as like 1 day or 1 or 2 days, inverse relationship doesn't really play out. But if you zoom out and look at a bigger picture, so if you put NASDAQ on top, we can see since the consolidation on the November-December top and the consolidation on the bond yield, when bond yield breaks up and continues to go higher, we see NASDAQ is entering a very big correction going down. So as mentioned, the bond yield will most likely to fall back a little bit for 2.5, 2.6%. And during this time until the mid-June FOMC meeting, where I expect the Fed to be dovish. If that is so, then it will possibly break the 2.5% and continue to trend back down lower, which will benefit the tech stock afterward. So this is the bigger picture that I'm expecting for the moment. So currently, I'll continue to buy and sell when it touches resistance or support line. And as for the stocks that I've been buying recently, the only thing actually green is TMF at the moment. As you know, I bought in on Monday at $15, and DKNG I got in at 16.5, so I'm down $1 per share. HUT I'm in for 4.7, so I'm down for a little bit. As for Mama, I got it at 27 when it touches the support line, and I have not yet have a chance to average down, even though right now it's below the support line at the moment. Same thing as any, you guys know I got in at 2.1, and I sold some at 2.9 at pre-market, and then 2.7, 2.5, and I started to rebuy some of the shares at lower price, and right now I'm back to where I started at $2 per share. So I'm down quite a bit on NE at the moment. It actually surprised me to go below 1.8 because 1.8 was my last ad. I was saying it will probably hit back to this low price, but looks like we actually have the retest of the previous bottom. And once again, there is a divergence showing, so this could be a pretty strong double bottom to have a little bit rebound in the coming days. And if you don't want to guess which stock will benefit within the NASDAQ, you can also buy the ETF for the whole NASDAQ. So something like the TQQQ is a 3 times leverage of NASDAQ. So as you can see today, NASDAQ dropped 1.2% and then the ETF dropped 4.5%. But if you're more into the general market or the macro trends, then maybe the index ETF will be better for you than the stocks. I'm also considering opening up a position for TQQQ, but let's see what it looks like tomorrow first. So this is for today. If you like the video, if you like my reasoning, do hit that subscribe button and like button. And I'll see you guys next time.